Okay, hello. I'm gonna make this video kind of recapping. I back from the gym, whole lot of crazy stuff going on. But anyway, I think there's a lot of more opportunity in the market this week than I'd probably say the last month. So I'm gonna be talking about my favorite names going forward, given what we had last week. So primarily, this video is gonna be breaking down Uber really quickly, and then I like Nike for a swing trade. Those are probably the only two we're looking at from this list. This week, I do like the setups AVGO and Tesla have. I just don't think it would be ready this week, so I'm probably not going to cover it. But those are kind of also on my watch list for potential trades here in the near future. So we're going to be starting with Uber. And then we're going to get into Nike. Those are both going to be more. The Uber one is probably going to be a little bit more of a longer term focus. We might need to kind of sit down and plan out how we should go about this Uber, but this Uber trade, I should say, not physically in an Uber ride. But yeah, so let's start off with the long term. So I really do like Uber. I think it's been flagging here on the monthly above previous highs, flagging below previous all-time high. So I was more talking about flagging above these highs that it set post IPO, maybe 2021. Obviously had that basing pattern, and now we're breaking out. So on the monthly, this is a pretty tight flag. You can see it just retesting previous all-time highs over here, and we're just kind of making this high and tight flag on the monthly, which is crazy, below all-time highs, which happened in October 24. So a few things characteristic wise, I always, if I wanted to see a reaccumulation range, I want to see a decreasing in volume. I don't want to see institutions having spikes in volume. That's usually significant, or usually signifies a distribution range, whereas reaccumulation, you usually see the volume decreasing subsequently as price is consolidating. That's because there's less available supply in the market. Professional hands are taking control of the shares to eventually move into a markup phase, whereas in distribution, you're going to see those spikes because they're selling off in large quantities. So I do like that characteristically. Fundamentally, I really like if we just start taking a look at some of these earnings reports. I mean, I just clicked a random one, March 20, period ending March 21, 21. They had like 2.9 billion in revenue. Fast forward to 2020, let's go 8.6 billion revenue, and then even in Feb, the last December 24 year end 24 quarterly earnings, we had 12 billion in revenue. So I mean, what 4x billion 4x revenue increase in the last 4 years is really good to see. This last earnings EPS was a huge success, huge pop. If we just start looking at the EPS trend here as I flip through, negative zero point 0.5, negative zero point 0.5, negative 3, negatives, there we go, 0.29, barely negative, 1.8, 0.09, 0.67, barely negative, 0.47, 1.2, and then they slapped it with a 3.21 EPS. So I think this could break and go. This is everything that we look for in at least fundamentals side. I previously just read. Oh, wrong one. Oh man, I'm on the wrong one. What was I going to? Damn it! Now I got confused. What was I going to? Yeah. I was gonna go to ChatGPT. So the can slim technique is something I previously just learned, like within the last, I don't know, 3 weeks. You might be familiar, but it's the book by William O'Neill. I actually have it right here. It's this book specifically. He lays out like a bunch of charts and patterns within it, and then also this can slim acronym. Basically took historical performance of a huge conglomerate of the best market leaders, if you will, or largest returns or best stocks, and it broke it into these this acronym. So current quarterly earnings, you want to look for significant increase, annual earnings growth, new product service, stuff like that. So I think Uber really fits into that well. I think Uber looks fantastic. So where I like Uber here, did my mic just turn off? No, it didn't. Okay, we're fine. I got the weird buzz in my headphones that they turned off, but I can still see it going. So Uber has been same thing. I think it's been reaccumulating. We had that massive volume spike post earnings, which is probably largely due to this 3.21 EPS, which is insane. And we've seen volume just absolutely shore up, and then it's really held up nicely compared to the market. Given we had massive drawdowns going on, but I mean Uber, this is in mid-February. It really only saw it saw 26% to its lows, but where it's at right now, we're sitting only at 10% decrease. So held up really well versus the market. It's right back into the range. I'm looking for some kind of trade off of right here, so 69.50 ish. And then I primarily wanted to talk about this one first, is because we can start positioning ourselves into larger sizes with Uber, given what it's got going on the fundamental side and the technicals. A high and tight monthly flag over previous highs, looking to break new highs, and then just slapped a 3.21 EPS quarterly earnings here recently. So I'm looking for, at least on the technical side for this week, structure is still bearish on the weekly. If we just take a look at this, you got your higher high, higher low, broke it, lower high, lower low, lower high, lower low. So I'd imagine some kind of, maybe we start off the week bullish, but then we close lower, and then maybe close low, then do something like that. Whereas we would have that new bullish structure creating that higher low. So that's kind of what I'm projecting in the next few weeks. I don't think it's necessarily ready yet, but I wanted to talk about this one first because I think this is probably one of the best setups in the market. I think Uber looks fantastic, and especially with that last quarterly earnings. We do have earnings coming up here April 30th, so I think it would be beneficial for us to take a larger size into that earnings. We could evaluate some of these VPA candles on the monthly, but I think that's coming up here. I don't know. I'd really want a retest of 69.30. This was a really nice opportunity right here, and it had a nice kind of follow through so far, but very difficult to play options with how high the VIX was. So not trying to be in options when that VIX balloon pops. So that's going to be Uber. I think it's fantastic. I think we should be trying for a commons position, maybe even leaps if we're comfortable. Really wish, obviously, I got in around 62, 60-ish, but I mean, that was quite the reversal. I mean, it reversed from 60 all the way to 73 within 2 trading sessions. So it is what it is. It is what it is. But let's go talk about Nike quick, and then we'll wrap up this video. Nike, I'm primarily interested in it because it has swept. It's swept these prior lows back in 2020. You saw the COVID crash. We are below these lows now, and we are very extended to the downside with some astronomical volume going into this previous weekly candle. So first thing I really like about this is we are so extended from the EMAs. I mean, just from the 20 EMA and the weekly, we're how many? We're 25. I mean, we're 20. We're 23% or 16 points away from EMA, 20 EMA on the weekly. So I do really like that for some kind of snapback reversal here. On the daily, we're making a nice structure. I like what we got going on. And then I'm basically just waiting for this to keep trading either lower. I'd like to see some kind of false breakout down here. I think that would give me a ton of confidence. If this knifes lower, if this fades lower, close below here, and then go, I think that would be awesome. That close lower would likely suck in a lot of new shorts. It'd probably liquidate any early longs. And then the recapture would be really good because, with those shorts now covering and with the early longs either getting back in or institutions are eating up all those early longs who are liquidated and buying themselves. So I think that would flip the balance in this range to be a imbalanced range, and I think buyers would have control. So Nike extremely extended to the downside. I would love another false breakdown. I think that would be an immediate sign to get in. So I do really like Nike with that. And really the only target would be basically a retest of previous structure. We wouldn't be, this is nowhere near any kind of long-term long, absolutely not. But volume attracts price. So volume, the most volume we've had around here is 75. You know, volume attracts price because the market is constantly aiming to facilitate buy and sell orders. When the market does that, it's a reason for volume to attract price. You know, it's where buyers and sellers are the most comfortable trading. And clearly within this last, I don't know, since December 2023, the most comfortable level that price has been trading at is about 75. So I'd be looking for a move back up into these previous lows. That's about it. But I think we're so extended to the downside. You know, previous lows is at like 75. That's like a, you know, if we get a false breakdown and entry near the bottom of this range, it's like a 40% move on the name. So can't argue with that. And that's kind of just a retracement back up to previous lows. I mean, this is quite the egregious move. So the rubber band, essentially, if you will, is stretched, and I would like to take advantage. So that's going to be it for this video. I think we should try and get positioned semi-heavy into the next earnings candle on Uber, especially if they beat on EPS and revenue. I think Uber could be awesome. Do I think it's ready to break out of its monthly pattern? I don't know. I mean, I do really like that it swept below 65 here. You know, we didn't take out any previous lows, but structure's there. Structure bullish and Gulf all the way over here, and then we're trying to put in a higher low on the monthly. So yeah, Tesla not really going to talk about, AVGO not going to talk about. I'm going to keep rambling, so that's about it.